But first, you need to understand the trap. The trap, how the premium lock really breaks hidden cost mechanics. Let's pull back the curtain. Most people think guaranteed means the price can't change. In these policies, it often means something else. The company guarantees you can keep the policy if you pay whatever the new premium becomes. That's a very different promise. Here's where most people get tripped up. Teaser rates. You start with a low monthly payment that looks great in year one. After a set period, often 5 to 10 years, the policy recalculates or re-rates based on your current age band. The result is a jump just as other costs rise. The policy didn't break a promise. The promise was never for a fixed premium for life. Age banding and stepped premiums. If you see age-stepped, age-rated, or annually renewable, that means your price is tied to your age, so it steps up at regular intervals. You're not doing anything wrong. Time alone pushes the premium up. The sales line locked in at your current age can be technically true for the first band. Then the staircase starts. Graded benefits and waiting periods. Many guaranteed issue or simplified policies pay a reduced benefit in the first 2 years. If death occurs during that period, the payout might be premiums paid plus interest, not the full face amount. If you missed that clause, you expected a higher benefit than the contract delivers early on. That's not an accident. It's how risk is priced without full underwriting. Policy fees and modal factors. The base premium is one number. The bill you pay monthly can be higher because of policy fees and modal charges for paying monthly instead of annually. Switching from annual to monthly can add 5 to 10% to your real cost. That's $25 to $50 extra per year on a $50 monthly payment. If you ever switched payment modes to fit your budget, you may have quietly inflated your real cost. Renewable language. Look for renewable to age 80 or renewable at increasing. Premiums. That's not a fixed price guarantee. It means you can keep coverage by paying the new, higher price at each renewal period. Past a certain age, those jumps get big fast. Missed payments and loan balances. With some permanent policies, if you borrow against the cash value or miss a payment, fees or loan interest can erode value and trigger a policy lapse. In simpler final expense policies, a missed payment can terminate coverage and reset waiting periods if reinstated. Either way, the risk is you pay for years and end up with no benefit. Let's anchor this with a simple example. Say someone buys a policy at 65 for $40 a month. It feels manageable. By the mid-70s, the premium has stepped up multiple times, now $85 to $120 depending on structure. Meanwhile, health costs rose, income tightened, and one missed payment creates a scramble. Many people lapse right here. The policy pays nothing. The family still faces the funeral bill. That's the worst-case scenario we're trying to avoid. Common traps you can spot in writing. Terms like stepped, age-rated, renewable, or increasing premium signal price changes. Graded or modified benefits mean reduced payouts early on. Policy expenses, administrative fees, and modal factors can inflate monthly cost. Contestability period means potential review delays on claims within the first 2 years. A quick win you can do today. Call the carrier and ask for the premium schedule and guaranteed statements in writing. Say, is my premium guaranteed level for life? Yes or no? Please send the page that shows it. Then ask, is my death benefit level and immediate from day one? Yes or no? Show me the page. If they dodge or only say guaranteed renewable, that's your clue the price can rise. One more subtlety. Some ads compare fixed pricing versus stepped premiums, as if fixed solves everything. Fixed pricing can be good, but only if the contract is truly guaranteed level for life with a level death benefit and no surprise fees. Don't rely on a headline. Verify the clause. Why this matters. Rising premiums create a slow squeeze that ends in a lapse. A lapse erases everything you've paid, and it usually happens when your family needs the money most. If you master the language and get the guarantees in writing, you avoid paying for a benefit you never receive. Once you see how the lock breaks, you'll be ready to use the question that exposes any policy and move to tools that put you back in control. Mini cliffhanger: the question that exposes any policy. Grab your phone and ask this word for word. Is my premium guaranteed level for life? Yes or no? And will you send me the exact page that states it? Then ask, is my death benefit immediate and level from day one? Yes or no? And please email me the policy page that shows it. Pause. Wait for a direct answer. If they say guaranteed renewable, that means the price can rise. If they say graded benefit, that means reduced payout in the first years. Next, tighten the net. Are there any age bands, stepped increases, or modal fees for monthly payments? Please include the scheduled premium table. Follow with, are there waiting periods, exclusions, or riders that can reduce or delay the benefit? Show me where it's written. If they won't send screenshots or a PDF, that's your signal. Here's the payoff. A clear yes or no in writing lets you decide without guesswork. If they dodge, you've got your answer. The policy isn't truly locked. That's when you pivot to a plan with zero surprise bills, cash you control, accessible to your family fast, and no lapse risk. That's pillar one, and it's the simplest when you can set up in under 30 minutes. The simple, liquid plan, high-yield savings. Why this works first. You need money your family can reach quickly without underwriting, claim reviews, or waiting periods. A dedicated high-yield savings account labeled Funeral Fund gives you control, principal safety, and predictable growth. The account is boring on purpose. That's the point. Funds are there when needed, regardless of market dips, and you decide the monthly transfer, so it fits your budget now and later. What to set up? Open a separate high-yield savings account at a bank or credit union you trust. Give it a clear nickname like Funeral Fund so you never mix it with your spending money. Add a payable on death beneficiary. Banks and mainstream sources explain that POD lets your beneficiary access funds directly after you pass, with ID and a death certificate, bypassing probate. Ask the bank for the beneficiary form while you're opening the account, or add it in online banking if they allow. How to automate it? Pick a number that doesn't pinch $25, $50, or $100 a month, and set an automatic transfer from your checking on the same day you receive income. Consistency beats intensity. Increase contributions when you get a cost of living bump or when another bill ends. If you're nervous about starting, commit to 3 months. At a small amount, momentum makes this easy. Setting the right target. Don't guess. Call 2 local funeral homes and request the general price list. For now, use a provisional target. Direct cremation, cremation with a service, basic burial, or traditional burial with viewing. National medians suggest direct cremation around $1,700 to $2,200, cremation with a service around $6,280, and traditional burial around $8,300. We'll tighten this with your local quotes. Then you'll update your goal in the account notes. Access rules your kids will thank you for. Add 1 primary pod beneficiary. And if your bank allows, a contingent beneficiary. Tell both where the account is and what it's for. Write a 1-page final wishes note with the provider you prefer, service type, budget, and who to call first. Put a paper copy with your other documents and an electronic copy in a shared folder. Access plus clarity removes guesswork. Common mistakes to avoid. No pod designation. If you skip it, funds may get stuck in probate. Fix this today with the bank's form. Mixing funds. Keep this account separate so you never borrow from it. If you need emergency money, build a separate emergency fund. Chasing teaser rates. Some banks offer a high APY that drops in a few months. A solid, consistent rate is better than hopping banks and forgetting your pod. Ignoring local costs. Overfunding ties up cash you might need. Underfunding forces last-minute debt. Confirm costs and set a realistic target. How to verify pod is active. After you submit the form, ask for confirmation in writing, an updated account profile, or a letter that lists the beneficiary. Some banks even show beneficiaries in online banking. If they don't, save a photo or PDF of the signed form. Share a copy with your executor or the two people who will handle your affairs. A quick example. Let's say you set $50 per month. In year one, you'll have $600 plus interest. In 5 years, you're at $3,000 plus, and if rates stay decent, it grows quietly in the background. Pair that with a small term policy for a limited window, and you've covered the full target from day one while your cash balance climbs. When your fund hits the number you want, you can reduce or drop term. That's leverage without locking yourself into rising premiums. The thing most people miss is immediate usability. Claims can take time, especially inside a contestability period or if documents are incomplete. A pod savings account can be accessed as soon as the bank sees the death certificate and proper ID. That speed reduces stress for your family during the busiest week they'll face. What to do if you already have some savings? Don't move everything. Transfer the amount you want earmarked for final costs into the funeral fund. Then add the pod. Labeling matters. Your kids won't have to guess which dollars they're allowed to use. If you're concerned about bank insurance limits, stay within FDIC or NCUA caps per depositor per bank, or diversify across institutions. Simple checklist you can finish today. Open a dedicated high-yield savings account named Funeral Fund. Add a pod beneficiary, and, if possible, a contingent. Set an automatic monthly transfer for an amount that fits. Write a one-page final wishes note and store it with copies of your account confirmation. Tell 2 family members where the folder is and who to call first. Now, you might be thinking, what if I pass before the fund reaches the full amount? That's where layering comes in. In the next pillar, we'll cover a small level term policy to bridge the gap while your fund grows. But even if you skip term, having a few thousand ready beats forcing your kids to float everything on a credit card. If you remember nothing else about Pillar 2, remember this: control, clarity, and quick access. You're not asking permission, you're not hoping a claim clears in time, and you're not gambling on premiums that rise with your age. You're building a straightforward solution your family can use within hours. Cost reality check. What funerals actually cost, regional ranges. Now let's nail the target before you shop for any financial product. You don't need guesses. You need your local costs. National medians from industry sources put a funeral with viewing and burial around $8,300 and a funeral with cremation around $6,280. But prices swing a lot by region, provider, and what's included. Your job is to find your local number and write it down. Here's why this matters. If you overestimate, you tie up cash you could use. If you underestimate, your kids pull out a credit card the week of the service. Getting the number right lets you size your funeral fund and any term policy with confidence, and it keeps you from buying fluff you never wanted. What to compare? Fast and fair. There are 4 common tiers. Direct cremation, no ceremony, minimal services, typically $1,700 to $2,200. Cremation with a service, ceremony plus cremation, $5,500 to $7,000. Basic burial, graveside, or simple service with burial, $6,000 to $8,000. And traditional funeral with viewing and burial, fully staffed, $8,000 to $12,000 plus. Call 2 local funeral homes and ask for the general price list. They're required to provide it upon request. Say, I'm planning ahead. please email me your general price list and any package descriptions. You'll see line items for basic services, removal/transport, preparation, use of facilities, vehicles, merchandise like caskets or urns, and cash advances such as death certificates or clergy honoraria. Now, the thing most people miss: packages versus line items. Packages can look cheaper, but they sometimes bundle services you don't want and hide markups in the merchandise. Ask for both the package price and the itemized equivalent. If the line item total is lower without something you don't need, you just saved money without losing quality. Casket and urn markups are a classic trap. Funeral homes can mark up merchandise, sometimes substantially. You're allowed to provide your own casket or urn from another vendor. If you like a package but not the casket price, ask how the package adjusts if you bring your own. If the answer is a vague, we'll work with you. Press for the exact dollar change. Set your target with a simple rule. Pick your preferred option, then add a buffer of 10 to 15% for cash advances and small variables. If your traditional burial quote comes back around $8,300, set your funeral fund target at $9,000 to $9,500. If you're aiming for direct cremation and you see pricing around $1,900 in your area, set the target around $2,100 to $2,300. You're not trying to be perfect, you're giving your family breathing room. Your quick win today: make 2 calls, request 2 price lists, and choose your preferred option. Write your target number on your final wishes note and in your funeral fund account memo. Once you see your local reality, every financial decision after this becomes simple. The smart, low-cost bridge: term life. Now, let's talk about leverage. If you're reasonably healthy, level term life can cover the full target today for surprisingly little while your funeral fund grows in the background. The reason it's a smart bridge is simple. You get more coverage per dollar for a fixed period. Then you shut it off when you don't need it. No forever premiums, no sneaky age steps during the term, and no lapse risk from rising costs, if you buy the right kind. Why this matters? The danger window is the next 10 to 20 years for most people, exactly when you want the certainty that your kids won't face a bill if you pass tomorrow. Term is built for that window. You can size it to your local funeral cost, plus a buffer for cash advances, travel, or a small debt. If your town's traditional burial runs around $8,300 to $9,000, a $15,000 to $25,000 term policy is often plenty. If you prefer a simpler cremation with a service, $10,000 to $15,000 may do the job. What to shop for? The 2 phrases you need are fixed pricing and fixed death benefit for the entire term. That means the price you pay is locked for, say, 10 or 15 years, and the payout doesn't shrink. You want a policy that's truly level, not annually renewable term, that reprices each year. You also want the term length to match your bridge plan. If you think you'll fully fund your funeral fund in 10 years, buy a 10-year level term. If you want more cushion, choose 15. How to compare carriers. Get at least 3 quotes from reputable companies, ideally through an independent broker who can shop the market. Ask each one to send you an outline of coverage that states fixed pricing and fixed death benefit and shows the term length in plain English. If someone pitches a no-exam policy, that can be fine, but verify whether the benefit is immediate or graded and confirm that the premium is locked for the full term. A quick health questionnaire or a brief exam can drop your price a lot if you're generally healthy. Underwriting and health. Basic underwriting works in your favor if you have manageable conditions and see a doctor. No exam options exist, but they often charge more for the convenience, so you're trading speed for cost. If your health is a hurdle, that's okay. Remember, your funeral fund and pre-need options don't rely on strict underwriting. Term is the if healthy, get more for less tool. Right-sizing the amount. Start with your target from the price lists you gathered. Add a 10 to 20% buffer for cash advances and small surprises. If your local cremation with a service comes to about $6,280, a $10,000 term can cover that with room to spare. If your regional burial lands near $8,300 and you want to add travel help for out-of-town family, choose $15,000 or $20,000. You're not trying to replace income. You're covering a single predictable expense with a little breathing room. Common mistakes to avoid: buying a term that's too long. A 30-year term costs more and outlasts the need. Stick to the years you actually care about. Buying a term that's too short. If you know you won't hit your savings target in 5 years, don't buy a 5-year term. Go 10 or 15, so you don't face a reprice.